Q4 PAT 2880. Now what they've reported for the quarter gone by, I just have the bottom line number, is a PAT of 2880. This is by and large in line with what we were betting on, but these are of course standalone numbers. Saurabh, I know I'm going to request you to react to the first flash, but prima facie the standalone number at 2880 are not looking that bad.
That doesn't look bad, one has to say, because I think 2875 is the previous quarter. So if they've indeed come in with 2880, that suggests they've at least not degrown at the PAT level. Obviously, one has to see how they manage to pull off this marginal uptick in PAT rather than the reduction. But most importantly, I think it remains guidance. Can they deliver at least 7% growth on the guidance front, at least 7% YOY growth? That's what our clients and we are focusing on.
The consolidated PAT, Saurabh, is out. It's at 2,990 crores.
So I think those would suggest that at the PAT level, they've done better than most people would have expected them to do. So that's certainly a plus there from an Infosys shareholder's perspective.
The consolidated revenue, which stands at about 12,875 crore rupees, which is a little below street expectations, or at least the average of those. But on the PAT front, they have outdone the expectations. 2,990 crore rupees is what Infi has delivered.
FY15 guidance is out, 7 to 9%. This is the most important number. It is not way out of what analysts were expecting, but Manish Sonthalia, 7 to 9%, not bad, but in line with the most optimistic estimate for FY15.
So I think they have managed to hold on to expectation of brokerage's estimates. So I think if they are between 7 to 9%, the stock wouldn't react negatively.
7 to 9% FY15 dollar growth. Are you happy or slightly disappointed because there is no surprise? Bhavin.
So you're asking me?
That's right.
Yeah, okay. Well, see, 3 months ago, the so-called consensus was at 13 to 14%. We were at 10%. We went down to 8% after that warning they gave. And now we are seeing that consensus is at, this is in line with consensus. I think that's a little bit of a, being very generous to the company, right? Because the stock has only gone down less than 10%. And we have significantly reduced our expectations for FY15 dollar revenue growth. In my view, this, in an environment where NASSCOM is talking about, almost 14% kind of industry growth, this is very much below par. And I think if the stock goes up, or if it doesn't go up, I think it's an opportunity to basically exit at these levels.